Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. You can join Brian Curtis and myself for the stories making news and moving markets in the APAC region. You can subscribe to the show anywhere you get your podcast and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
Well, the U.S. Justice Department sued Apple today, accusing the iPhone maker of violating antitrust laws. The lawsuit alleges that Apple has used its power over app distribution on the iPhone to thwart innovations that would have made it easier for consumers to switch phones. The suit was filed in New Jersey federal court. It marks the culmination of a 5-year DOJ probe into Apple, and some 16 attorney generals were joining in with this. Bloomberg Intelligence senior antitrust analyst Jennifer Rhee says it may be tough for the DOJ to prove that Apple intentionally limited competition.
It's very difficult to prove monopolization where a company has legitimate pro-competitive business justifications for its conduct. But, we've already seen in another case against Apple by Epic Games, a lot of that evidence fleshed out, and a judge in that case decided that Apple did have pro-competitive justifications for its walled garden. And a lot of the same evidence will be put on trial here.
Bloomberg Intelligence senior antitrust analyst Jennifer Rhee. Shares in Apple slid 4.1% today, erasing about $113 billion in market value. Joining us now is Anna Edgerton, Bloomberg Seattle Bureau Chief, to take a closer look at this story. So there's a lot of debate over this. Some support the notion that Apple's not playing fair, but others say that Apple is doing what a lot of companies do to protect their IP. What are you hearing from the people you've spoken to about this lawsuit?
Yeah, it's hard for Apple because they really created the smartphone market with the iPhone. And now you see how other competitors who are offering cheaper options are winning over a lot of consumers. And Apple's argument is that they don't have a monopoly on the smartphone market in the U.S., that they don't even have 50% of that market. But what the Justice Department is trying to say is that it doesn't necessarily matter what percentage of the market a company has in order to engage in monopolistic behavior. I mean, it's really interesting to see how the complaint lays out specific instances where you have executives saying in internal emails, we need to do this to keep people from leaving the iPhone and leaving the Apple ecosystem.
So this suit marks the culmination of a 5-year investigation into the company. So this obviously predates the Biden administration. Having said that, I think we need to point out that the Biden administration has been very, very tough when it comes to antitrust, right?
Absolutely. And, this really fits with the kind of neo-Brandesian new school of antitrust that we see really embodied by Federal Trade Commissioner Lena Khan, by Jonathan Cantor at the Antitrust Division, who helped put together the complaint that we had today. And I know from talking to people within the Justice Department that Cantor took a very personal interest in how this was written and how the complaint was put together and kind of the narrative that was created and kind of presented to the public, so it doesn't read just like a bunch of legal language citing century-old antitrust law. They're really trying to tell a story of Apple's conduct that results, they allege, in less choice and higher prices for consumers.
Yeah, in many cases, charging Apple with actually trying to hurt the competition and to destroy that competition from gaining. I'm curious whether or not Apple is countering by saying that privacy is a big part of this, that they're trying to keep the iPhone system, the iPhone ecosystem safe.
Yeah, absolutely. I mean, that has always been one of Apple's big selling points is that, they take privacy and encryption really seriously, trying to draw a contrast with other big tech companies like Google. And so this is definitely an argument we expect to hear as this case goes through. But, it's interesting the anecdotes that they use in this complaint. And one that really caught my attention was a user was talking specifically to Tim Cook, the company's CEO. And he said, I've I've been trying to send my mom these videos and they come out all grainy, which of course is a familiar problem for anyone who has an Android and tries to send a video to an iPhone user. And Tim Cook's response was, well, you should buy your mom an iPhone. And, that kind of comment from an executive, especially from the CEO, certainly sounds like monopolistic behavior.
This is a $2.6 trillion company. They've got obviously very, very deep pockets. When you look at the litigation, how many years is it going to take to resolve this complaint, this lawsuit?
These things do take a long time, and I've talked with several people in kind of the antitrust law space today. And I've heard from several people that they're frustrated that Congress was not able to pass this antitrust legislation last year that they were considering that would have addressed exactly this kind of gatekeeper authority and would have given the administration's antitrust enforcers kind of a stronger statute to stand on and bringing these kind of cases. That legislation is not in place. That makes it a little bit more of a, ambitious case to bring. So I think there's a lot riding on this to see how courts interpret this kind of argument for this kind of company.
In some of these cases, we see multi-billion-dollar fines, but then the companies just move on and go about their business. Are we expecting from this to see Apple being forced to change the way it does business?
We've definitely seen tech companies in the past kind of write those fines off as part of doing business. Yeah. Meta Platforms is a good example in paying some of those European fines. Well,
even with Epic, it found a way to almost put the same charges in, but just label it differently.
Yeah, and I think one thing that's going to be important for antitrust enforcers to do is to actually change the business practices. And that's one thing that we heard from Jonathan Cantor today at the press conference and presenting this case, is that he's not satisfied by the kind of whack-a-mole remedies as he presented it, where, Apple promises to change this little behavior, tweak this fee in order to respond to the complaints from especially antitrust enforcers in Europe. What he wants to see is kind of a different approach to their business model. And, that has reverberations across big tech, especially these companies that are characterized in the antitrust world as the gatekeepers of such an important industry to the global economy.
Well, I think we can credit the Europeans with the win in allowing Apple or forcing Apple to change the design of the charging port on the latest phone, right? That was one of the things that the European Union wanted to see. And we know now that the European Commission is gearing up to announce more investigations, not only into Apple, but Google as well. What does it do to the Justice Department's case when the zeitgeist seems to be that we are holding big tech companies to a higher standard when it comes to, even flirting with the idea of infringing on competition or maybe outright violating antitrust law?
Yeah, you mentioned the European Commission investigation that Bloomberg reported today. We're going to see, has been started against Apple and Google. And, as the Digital Markets Act was being discussed in Europe, as that was being passed, there was a lot of frustration from U.S. tech companies that the Biden administration wasn't doing more to stand up for U.S. companies against what they saw as clear trade discrimination. They would argue that this legislation was written pretty specifically to target the biggest U.S. tech companies. They're the only ones that kind of have this position in the tech ecosystem. And, now we're going to see kind of the consequences of that. And the penalties are big. The penalty for violating the DMA is 10% of global revenue. So, there's a lot at stake here, not just for the fines, as we've discussed, but also for the business model of these companies going forward.
So this is the Justice Department along with 16 attorneys general. Is there anything in this? Does it say anything that there was some 34 or 35 other jurisdictions that chose not to be involved?
I feel like we can't read too much into it, especially with the Justice Department complaint. Just for some inside baseball, the Federal Trade Commission, when they bring a complaint and ask attorneys general to join, there's a little bit more back and forth in revealing the contents of the complaint. The Justice Department, on the other hand, generally writes the complaint. It's more of an in-house process, and then they take it to the states right before to say, would you like to join? They may or may not do that.
Great information there, Anna. Thank you very much for joining us here live on the program. Anna Edgerton, Bloomberg Seattle Bureau Chief.
Let's take a closer look now at this Reddit IPO. The stock rallied, checked at 48% on its first day of trading here in the U.S. The company and its shareholders raising about $748 million. That based on a price 34 a share, which was at the top end of the marketed range. Let's check in now with Amy Orr, Bloomberg Equity Capital Markets reporter, joining us from here in New York City. Thanks for making time for us, Amy. What are we to make of this? It seems like a pretty good splash, but the IPO market has been kind of dry for a while, hasn't it?
Yeah, it's been very slow. And despite the fact that we're actually at the end of March, we've only seen 8.7 billion. And then most of the action or most of the excitement has been over this past week with Astera Labs and also with Reddit definitely today.
It's interesting. Reddit's been around a long time. It took a long time to come to market. It's not making money. But it appears to investors, I think, that Reddit can flip a switch and do so. So what is involved in flipping a switch to finally start churning out the profit?
I would not say that it's flipping a switch. It's really a long time in coming. So the company has been in operation for 18, 19 years. And then, but it actually, I don't know whether the fact that they've been waiting for the market to come around or the fact that they actually chose the right time to go public, because this is right at the moment where they actually turned profitable for the fourth quarter last year. And technically, they are looking at this year to break even as well. And it's also because last year, before this year, they've only been relying on advertising revenue, but this year onwards, they're looking at additional revenue stream, including licensing deals with AI companies to teach AI models to learn from the vast Reddit threats that it's been accumulating for 18, 19 years.
Yeah, I was just going to make that point. I mean, you create or gather a lot of data in 18 years' time. $8 billion market cap. I mean, how does that seem to you?
It seems like a dream, definitely. I have to say, like, for a person covering the IPO market, I don't hope it to flop, but there are signs that it might. So it's great that it didn't, because it's, in a sense, it's Reddit, but it's also more than Reddit. For the time being, everyone is looking at Reddit as the indicator of if a company that is not fully profitable for the whole year last year, this is what has been frowned on, because everyone is looking at a very jittery IPO market. Investors really want to actually make their dollars count. If you look at last year, you can just put money at any of the Magnificent Seven, and then you can actually, or you just put it in the index, and you can get 24% return, or even more if you put it in NASDAQ instead of the S&P. So, like, people are looking at IPOs with a very great skepticism, because do I really want to put money in risky assets? And what are the chances that I can actually make money out of it? For the beginning of the year, the two ones that had opened the market wasn't really to the great effect like we've seen for the past week or so. Astera Labs went up 70%, and then also Reddit nearly 50%. So. Yeah.
These two are massive, yeah. Pretty incredible. I think one of the issues with Reddit, as you highlighted, was advertising is a little difficult, with Redditors being somewhat opposed to that. It's something that there hasn't been a lot of advertising that's interfered with what you get on Reddit. But now these deals, like particularly with Google, the search deal, that would seem to be a big deal. But then also, I'm kind of curious, because there's a lot of content on Reddit that is just sort of the opinions of people that are, pretty wild opinions with a lot of sort of difficult language and everything. How is that going to be parsed through by these AI users?
I think it's a very Marmite kind of question. You either like it to the point that you really devote it to Reddit, or you don't like it at all. I'm not a Reddit user, so I don't really have a login. But for people who have particular interests, either for running, for gardening, for whatever, they really value the fact that you can actually drill all the way deep down. If I'm really into running shoes, I can actually know how long does it take to break my shoes in, and in what way I can break it faster. Those are the things that sometimes it's great for people who have like consistent interests, like on a day-to-day basis. But sometimes I just want to know like what color lipstick suits me best. And then sometimes I won't even like see the ads on Reddit, which is probably some of the problems that it needs to tackle, because a lot of the users who go on Reddit actually search on Google, and through Google led to Reddit. So these are not the kind of revenue streams that it can totally capture. And this is the problem or the challenge that it has to tackle going forward in order to continue with the 20% kind of revenue growth rate going forward.
Yeah, I think we can agree it's a very unique social media community. But we referenced earlier that this IPO would raise $748 million. Shareholders may be cashing out, so the insiders, maybe some users have the opportunity to make a little money. Is the company going to deploy any of this capital back into the company to try to do something special, maybe that we haven't seen?
It's really funny because the deployment of capital is one thing that we haven't actually seen a lot of talk on. To be honest, there isn't a lot. It's not like software company that or semiconductor company that there's a lot of capital that is needed. So like for other kind of tech companies, there's a lot of capital burn or cash burn. For Reddit, it's actually pretty normal to maintain it. And then it doesn't actually need a lot of like people to actually run it, because people just organically go on the forums, and then there are moderators who volunteer to help it. So it's more about maintaining it, and I think that's the challenge. It needs to motivate the people to continue what they've been doing, but also on the other hand, they have to really market the content they have right now in order to capture that AI licensing deals.
All right, Amy, a pleasure to have you on the program to sharing your perspective on the Reddit IPO today. Stock pops 48% on its first day of trading. Amy Orr, by the way, Bloomberg Equity Capital Markets reporter.
Joining us now is Mary Nicola, who is Bloomberg M-LIV strategist, to take a closer look at markets. So, Mary, are investors and even central banks getting comfortable now with the notion of inflation settling at a higher level? And if so, is that a good thing or a bad thing?
It's a combination of the two, because it needs to be accompanied by strong growth. So if inflation remains high, then that's okay to some degree, as long as there's disinflation coming through, which we're seeing in, let's say, the US and the UK. But it also, if they do stay that higher for longer, what's good for equities is the data coming through as robust, just like we saw last night in the US, where all the data was proving that Goldilocks scenario. So we need to see that Goldilocks scenario continue to unfold through the data that's coming through in the U.S. and the rest of the globe.
So to stay with that metaphor, if one of the bears in that house becomes aggravated, what would likely drive that change? What would be kind of propel the bear to really become a bear at this point?
Yeah, it'll really come down to if inflation remains a little bit. Let's say we see a reacceleration in inflation, for one thing. Let's say we see some cracks in the labor market. That does signal some sort of easing from the Fed, but at the same time, it makes a little bit more reluctant, because if inflationary pressures are increasing and yet growth is starting to show signs of weakness, then you get concerns about stagflation, right? And that's not something that's positive for equity markets. It's not positive for bond markets. Basically, it puts investors on the sidelines and just a little bit more wary. So it's really about that. The economy needs to be hot in all the right places and cooler in all the places where it needs to be.
It's interesting because in the U.S. stock market, we are seeing a broadening. In particular, we've seen a lot of industrials and financials do well of late. And yet it's puzzling because it's happening at a time that we actually do think growth is slowing. I suppose it matters about valuations. So let's talk a little bit about that. Do you expect that broadening to continue?
Well, a lot of them has been catch up, right? So if you look at, let's say, what are the big returns, and everyone's been talking about the Magnificent Seven and how they've really been the key leaders in this equity drive. So for a lot of financials, industrials, it's more about catch up. It's more about seeing that there's a broadening out in growth and that it's not just particular to one particular sector, and that will help these other sectors really come through. And again, it has to be that growth remains robust, and the data still points to that Goldilocks scenario.
I don't know when you started in this business, but can you imagine that we're talking about a Nikkei 225 at 41,000? Does that impress you?
It does, actually, because when you think about it, everyone got excited about when Abe came through, and then you had the three arrows, and that was the last time everyone really got excited about Japan stocks. And then you think about it now, and it's a whole new vigor, right, which comes through. So yes, the DOJ has hiked. They exited negative interest rate policy, but there's still catalysts that are going to continue to drive equity markets in Japan. So for one, you still have a weak yen. That's important. You still have global markets doing really quite well. And then the third thing is that you have this focus on improving corporate profitability. You have this reform, the aspect of reforms that are still coming through that they're emphasizing. Remember, they were talking about just looking at some of the companies that have to pay out more dividends, for example. That's a big thing for Japan equities. And if that sort of reforms continues, that's going to continue to push the Nikkei higher and, of course, and just make people more positive on Japan.
It's very interesting that the broadening out we talked about before is happening globally, because we've seen the MSCI All Country World Index get up or rise about 25 or so percent since November or something like that. And it brings us to China, because that hasn't been a good period for China. We note, though, that now the CSI 300 is up around 15% from a low it hit last month. But it's getting close to the 200-day moving average. What are you seeing with China stocks now?
Yeah, there has been a clear divergence between what we're seeing globally and what we've seen in China. And there's some reports that we had done on the M-LIV blog where it shows that there had been a break, around 2022, 2023, where there was a divergence between the MSCI and China and the implications of China on the rest of the globe. And that, of course, could be because of the fact that China has been marred by property issues and the property sector, and it has been in the doldrums on that for that reason. So there's been a lot of pessimism on China. There's been a lot of pessimism, especially on the private sector, whether it really can come back with a strong vigor. And that's actually been positive in the sense that it's not weighing on the rest of the world. And what really has been the key driver for, let's say, the MSCI ACWI and for a lot of emerging market indices has been the S&P. And if that continues to go and U.S. growth continues, then that should propel the MSCI ACWI and EM equities more broadly.
So if you use fundamental analysis and you look at industries within China that may represent some type of opportunity right now, given how badly they've been beaten down, is there anything that's on your radar right now where you would advise an investor not necessarily to jump in, but to take a very, very close look?
I think overall the market's still going to remain cautious on China, and we ourselves are in that same boat because of the fact that you haven't seen fundamentals play out. You haven't seen strong fundamentals come through, whether it's on the economic side or whether it's in the private sector. So it's really hard to pinpoint a specific sector on that basis because overall, there hasn't been a real remedy for the property sector. You still have issues coming through from Vanke. You still have the unwind from Evergrande. So there's still too much to consider for really to jump back in.
All right, tough question for you. What's one thing you're seeing, Mary, that others are not?
I think the main thing that we've been focused on is just the broader implications of what is happening with the Fed on emerging markets and how that's going to unfold and potentially put emerging markets on the sidelines.
Yeah, excellent. I knew I could ask you a tough question and you would just kill it. Thanks so much. Mary Nicola there, Bloomberg M-LIV strategist with us live.
This has been the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.